Hey, what's up, traders? Jack here from Solar Trades, and today I would like to go over a super simple and profitable day trading strategy that I've come across. The strategy just uses three indicators, and it is incredibly simple and easy to follow. Excuse me. So before I begin, I just want to let you guys know that I am a Bybit affiliate as well as a copy trader for them. So if you would like to sign up with Bybit, make sure to use my link in the description. You get lower fees and some rewards. And then if you would like to copy trade with me, my link will also be in the description. I also have a Discord, Solar Trades, or discord.gg/Solar Trades if you would like to come trade with me. Link will be in the description. Every membership comes with a free 3-day trial, so no reason for you guys to not check us out. But anyway, enough with that. Let's get right into the video. So here is our strategy. It's super simple. We're in a trade right now. We're in a short, and I'll go over why we're in this short just a little bit later. So our first step is let's remove all of our indicators. And I would want to set this up with you guys together. So let me grab my notes. Okay, here's what we do. So go to indicators, and your first step is to add BMC Cipher A. Okay, we got that added. Then we're going to want to add SSL Hybrid, okay, by Michael00. And then lastly, we're going to add Cipher B plus Divergences by Vuman. Both Cipher A and Cipher B are by Vuman. So now our chart looks absolutely crazy. Definitely, obviously, going to be changing some things. So first, let's go to Cipher A. We're going to leave all of the inputs the same. However, go to Style, and let's turn off all of these EMAs. You don't need any of these. Since we're not using the EMAs, we could also turn off the long EMA signal, the short EMA signal, and then let's turn off the blue triangle. Lastly, just turn off the plot backgrounds, and then we're good to go. Oh, lastly, make sure, this is just to make things a little easier. Go to the bull candle. I like to switch it to green and then turn the opacity all the way up, just so, like I said, it's a little easier to see. So now that that's good, let's go to SSL Hybrid. You're going to want to turn off the candle size, exit arrows, the MA baseline, SSL 1, bar color. You're going to want to keep the baseline upper and baseline lower channels. Turn off SSL 2, ATRs, the plot backgrounds, and then we're going to leave everything else the same. Lastly, let's go to Cipher B, and we're going to want to turn off background color, all of these. We're going to turn off quite a bit, all these momentum waves. Oh, keep VWAP on. We're going to want to turn off the RSI, all these divergences, turn all this off. You do not need any of this. I know there's quite a lot, but let's turn all this off. And what we're going to want to keep is these MFI bar colors. Turn off plot backgrounds, and then I like to turn up the opacity because that's all we're using. Theoretically, these plot backgrounds you could keep on if you want. It shows the depth of the money flow. I personally don't need that, so I just turn it off because all I want to see if the money flows in the red or if money flows in the green. So once all that's off, we're lastly going to want to go to inputs. Go down to the MFI period right down here and change it from 70 to 21. And then, okay, leave everything else the same. And then, boom, now we're good to go. So now let's get actually into the strategy. So first off, we're going to want to let's look for longs. I'll show you guys how you're going to want to trade a long. So these two I just laid out as examples to make it easier to find. So for long, this is a really good long that happened on Sunday, 2 days ago. So what you're going to want to look for, so let's remove this for now, is the very first thing is you want money flow to be green. If money flow is red, simple, don't take it, that's it, right? If you're longing, you want the money flow to be in the green. That means money flow means money is coming in. You want that to happen if you want price to continue to go up, right? So that's pretty self-explanatory. Second thing is this band, this SSL hybrid band, it's pretty much just like a moving average. It must be above. Price must be above this band, right? The band must be blue. And here's what I mean. Okay. you want to see, so what we're trading is the momentum of the breakout, right? The break above this band. If we're longing, we're playing the momentum of the band being broken through, right? So here's what we're going to look for. We want to see a crossover, right, of the band. And then what you want to see is a green candle with the green bull candle, right? We want to see a green bull candle. Oh, and I don't know if I want, okay. VWAP, I think I forgot to say this. VWAP must be above 0, right? It must be above this gray line, which is 0. So right here, it's at 21, perfect, right? VWAP must be above 0. So let's get back to it. So we see the green bull candle, right? Perfect. Now we just need to see one more thing. We need to see the next candle close, right? We need the bull candle. We want to see this on close, and then we got to wait for one more candle to close. We need to see the next candle close green. Doesn't have to have the bull candle, right? It's nice. It's very nice if you see the bull candle as well, but it doesn't have to. You just need this second candle to close green. Once that candle, right, this one closes green, we can enter at the next candle's open. Last thing that I want to go over is that from the time of your entry and the crossover and the entry must happen within 5 candles. Okay, so what I mean by that is here's the crossover, right? This is the original crossover, this candle right here. Then there must not be more than 5 candles till your entry. So here's 1, 2, boom, your entry's on the 3rd candle. That's perfect. There can't be more than 5 though. If there's more than 5, it's an invalid trade. Don't take it. This is because that initial momentum may have died off and price might reverse. It could be a false breakout. So we don't want to take too long from that initial crossover. So, and that's very important. Even if it's 6, don't do it. If it's 5 or less candles from that crossover, that's a valid trade. So now we have our entry, right? Boom, our entry's perfect. RSI is in the green, VWAP's above 0. This MA is obviously, the SSL hybrid is blue, right? That means price is above, obviously. There was only 1, 2, 3 candles from the crossover, right? The next candle opened green, and we got the bull candle. So now what do? Right, we enter our trade right here at that candle close, that second candle close, and then we want to find the swing low of the last 10 candles. So let's count it out. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the 10th candle is here, right? We were not going to look any further. So the swing low of the past 10 candles is right here. Okay, so we're going to draw out our stops right there. And then what we do is put our take profits so that the risk to reward ratio is a 1-to-1. So let's draw this up. Boom. We got a risk to reward of 1-to-1. And then, would you look at that, hits perfectly. So now that we understand the take profits and stop loss is super simple. Like I said, for the stops, you just want to find the swing low of the past 10 candles. And then your entry, you just make it a 1-to-1. So there's only 4 ways that your trade should close. There's only 4 situations where you'd want to close your trade. Situation 1, like this, for example, the take profits hit, perfect, right? You're out of the trade. You just made 0.8% unleveraged. Obviously, because this is more of a scalping or day trading strategy, I personally use leverage when using this. However, it's by no means a requirement, but sometimes the trades are quite small. You're playing really small moves like 0.1, 0.15%. So adding leverage might just increase your profits a little bit. Obviously, you're increasing your risk with leverage, so be very careful. But I personally, at least, do use some leverage when I'm trading this strategy. Excuse me, sorry. Apologies about my voice. I'm ever so slightly under the weather. I got a little very rough, scrappy throat. So, anyway, situation 2 is your stop loss hits, oh well, on to the next one, right? It's not 100% accurate. There will never be a perfect trading out or strategy or script or algorithm, right? Situation 3 and 4 are kind of similar in the sense where if you see either a red blood diamond, right? These big red, very different from the smaller ones. Okay? You want to see, well, you don't want to see one of these big, bright red diamonds. Like I said, if you see a smaller one, ignore it. That's okay. You just don't want to see one of these big, red, juicy ones. If you see this, if the candle closes and you see this, get out, right? So theoretically, just as an example, if you're in a long from like here, right? All example, you would not be in this trade, but just saying you were. If you longed right here, and then you see this blood diamond, and you see it close, you're going to want to get out at this candle right there. This candle, you want to get out. Likewise, for these, excuse me, sorry again. These yellow crosses are called manipulation crosses, and pretty much it's kind of self-explanatory. If you see one of those, that means something very funky is happening within the market, and you're probably going to want to get out. So, for example, here's the manipulation cross. Once this candle closes, you're going to want to get out right here. And I say you want to wait till the candle close to avoid any sort of repainting. What repainting is this messes up a lot of bots or algos or anything that uses live indicators, so or like real-time data. So these happen in real time, right? It is not a lagging indicator. But the reason this could be bad is, let's say, just hypothetically, right, you're in this long here and you see right here that the blood diamond starts occurring, and you sell, but then price can come back up, and that red diamond, that blood diamond, might go away and price could go back up. So in order for you to not get faked out, right, you don't want to, getting repainted sucks. So just wait till that candle close and the manipulation or blood diamond confirms, then get out. I know it seems counterintuitive that you would want to wait for price to keep going down, because the whole point of you closing on these blood diamonds or these manipulation crosses is to mitigate risk. But at the same time, especially with these indicators, it's quite frequent that you see a lot of repainting. So you just want to confirm, just so you don't sell too early in case price does decide to come back up, right? If this blood diamond doesn't actually play out, well, now you just screwed yourself. So just wait till that close happens. And once that close happens, get out. Likewise, for the manipulation, you're going to want to get out right here, and definitely prevents future loss. And even if it only saves you a few percent, hey, that's a few more percent that you would have if you hadn't sold otherwise. So those 4 conditions are the only times you're going to sell: at your take profit, at your stop loss, or at the close of a blood diamond or a manipulation cross. And obviously you want to close at manipulation because, like I said, someone or something is doing something weird, manipulating the market. They're trying to push things down. So just get out before something, because I mean, look, once this closes, we still went down another 1.5%. This is on the 5-minute. From this candle close, I mean, even from this initial blood diamond that we saw, 2.4% drop, so there's strong indications. It might not play out immediately, but there's strong indications. So now that we understand that, that's kind of it for longs. Like I said in the beginning of the video, it's honestly a really simple, a very, very simple strategy. So now let's head over to shorts. So it's actually kind of funny. Really nice long opportunity presented itself, and then from your exit, there was about only 10 hours till the next really good short, which would have made you even more, over 1%. So here's the strategy. Just like with longs, it's just pretty much the inverse with maybe 1 or 2 extra things. So what you're going to want to look for is, like I said, you want to cross down, right? We see here's the cross down, and then here is the candle open, right? So now we're looking, right? The SSL is red, money flow is red, VWAP's below 0, and here's what we're going to be looking for. Either one of these red crosses, one of these red diamonds, or a blood diamond. And usually when a blood diamond happens, you get both the red cross and the red X, like here. This little kind of fuzzy thing, that is both of these built into one, and then we got the red diamond on top. So very, very strong. But in this case, it's just a nice little red diamond with, with nice manipulation. But again, when it comes to the manipulation candles, do not trade this alone. It is nice to see, like when you're shorting, you don't necessarily want to see a manipulation candle ever, but it's not a deterrent to not take the trade like it is for longs. If you see a manipulation, get out. Because 99% of the time when a manipulation candle does happen, it's usually meaning things are getting pushed down. However, these manipulation candles can lend some very, very high volatility. So you might, even if price continues to go down, you theoretically could still get wicked out because of just the increase of volatility. So just be careful. But it is by no means a deterrent away from taking a short, like it is with the long. But anyway, we see the red diamond, right? The red diamond prints out below. It opens and closes below the MA band, and then here's where we enter. We wait for, and we want to see this next candle close red. So it may be annoying sometimes, right? You just missed out on almost a percent in of itself, right? But hey, we want to be careful and we want to make sure things are confirmed. So we enter, right? We're going to enter right at this candle close, right at this candle open. Like I said, money flows in the red, VWAP's below 0, and we got our confirmation on the trade. So, and obviously the cross happened two candles. The cross happened 2 candles before the entry, so all within our parameters. So now, obviously, you're gonna want to look back 10 candles. So for our stops, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it would be right here. And that's pretty much, yeah, okay, so here are our stops, right? And then we got our stops. Now we're going to move our take profits down to a 1-to-1. And would you look at that? It hit absolutely perfectly. It couldn't have been any better. Could not have been any better than this. This bottom wick hit absolutely perfectly. So here's our 1-to-1 trade that was as perfect as it could get, honestly. Like, a lot of the times it won't happen that close, but I have seen, when I was doing some back testing, I did see 1 or 2 other examples, previous trades, that looked identical to this, where it couldn't have been any closer to hitting your take profits. So I'm going to be truthful. When it comes to this, I would recommend that if price is very, 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 very close, I'm not telling you guys you have to watch it, right? I'm not telling you guys you should. Theoretically, you should be watching all of your trades, but I'm not. It's whatever. If price starts getting very, very, very close, I would recommend just taking profits, because I have also seen, though, where a few times the trade actually takes a loss after barely, ever so slightly, barely missing the take profits. So what I would recommend is that if you have a weird feeling that price might, let's say if you're in a short, that price might go back up, I would just and it's very, very close to your take profits, I would recommend to not get greedy and just take your profits, because what, you're going to make an extra 0.005% on the trade, like, it's not worth it. 0.05%. It's not worth it for the profit you'd be in, as well as the loss you could take. So I would recommend, if it's close like this, I would recommend taking it, because even though it went, if you look real close, it went ever so slightly down. I have seen it where, look, that's 0.01%, right? I have seen it where it is 0.01% away. It could have closed right here. And it's like, just take your profits, because then look, price eventually came all the way. It hasn't even, but may as well have just taken your profits. Oh, would you look at this? Our current trade is, I'll go over this one in a second. So I would just recommend, if price is close, like super, super close, and you have a weird hunch that price might come back up, just take your profits. It's still a successful trade, you know. But that's pretty much it. Like I said, it's literally just the inverse of longs, except you are also looking for 3 things instead of just one. Oh, and the only way I would say that you should get out of your trade is if you're in a short, if you see 3 of these green bull candles, if you see 3 of those within a super, super short succession of each other, like something like this, for example, right up here, we see a bunch of them, just get out. It's kind of like showing the blood diamond. It's a little less accurate. However, it's just to mitigate your risk, you know. Those are only in place to mitigate your risk. And then obviously if it hits, take profits or stop losses. Those are the only ways you should get out. But yeah, so again, that's literally the whole strategy. It is super, super simple, very profitable, and sometimes you get things very, very exact, like this. It was a 0.1% difference. So that's a really perfect trade. You got the absolute bottom. So yeah. So to quickly go over this trade, because this is a really nice one. See, this is what I mean, it's still nice, 0.5%. If you're on 20x leverage, it's still 10% gain. But just because this is happening live as we speak, here's what happened. So like I said, this candle right here is the cross under. So then we look, 1, 2, oh, here's our red X, okay? We see the red X, and then boom, the very next candle closes red. So our entry goes, obviously we see money flow in the red, we see VWAP below 0 at the time of our entry, and then price is obviously below the SSL band, it's red, and that's a perfect entry right there. I mean, it can't get any easier as it gets. This happened, what, 5, 10, 15, 20, 25, that happened about 30 minutes ago, and we'd be in a really nice trade right now. So yeah, it's easy. It's honestly easy as that. So there's kind of, yeah, it's kind of it. What I really want to make known and clear though is 2 very specific things. One, the candle. So right here, this is not a valid entry. This right here, it is not valid, because even though we see the crossover, we see the green crossover, this candle did not, this green bull diamond did not open above the MA. Okay, like this one did, for example. This one opened above the MA. And what was I gonna say? Oh, and like for this, for example, you want to make sure that bull candle has to open up green. So like this, for example, right here, this is valid. It's above, happened within, you know, is this actually an entry? This might actually be an entry right here. Hang on. So whoops. So 1, 2, 3. Yeah, so this is an entry right here. This would actually be one. So you go to the swing lows, and you go up 1%. So this trade is, we'd be in 2 trades right now. Funny enough, but this is a valid entry because look, here's a crossover. 1, 2, 3, 4. It's not still within range, and we see the red or the green bull candle followed by another green close of the candle. However, like this, for example, this is not valid for 2 reasons. One, it did not open below the moving average, or the SSL, sorry, did not open above, and let's just hypothetically say it did. The next candle was red, so that would be making it invalid. So those 2 things are incredibly important to remember, that it must be open above for the bull candle to count, and the next candle must be green. If it is not, do not enter. So those two things are very, very important to remember. So they're actually, we do find ourselves in a funny scenario right now. This does happen occasionally where a long will print out and we'll be in a short. What I recommend doing is selling if you're originally in a long, what I would recommend doing is, just let's say you were in a $1,000 long, okay? What I would recommend doing, if you are still on that $1,000 long and a short signal prints off, what I would tell you to do is sell half of your long, sell $500 worth of your long, and open up a short, just to hedge it. You will take a little bit of a loss on that long. However, you will now give yourself money to short it, to hedge it, and let's just say in a hypothetical world, this plays out perfectly. Our stops on our long are down here, right? Let's just draw this out. So there's our long stops. Our take profits are technically above that. So in a perfect world, what would happen is our short would hit or take profits. And then we very well could long back up and make some profits there, but that's again hypothetical, and I am in no way to say what's going to happen, but because this is live markets. But I'm actually glad this came up in the middle of the video. If you do see this, if you are live trading this, you enter the long here, and then an hour or so later, let's see, an hour 30 minutes later, a short signal prints off. I would recommend that you sell half of your long. So if you're in a $1,000 long, sell half of it, right? Now you got $500 in cash, and go buy an equally sized $500 short. So I'd recommend do that, and then keep everything else the same. You do not need to change any of your stop losses or anything. Just keep it the same, and yeah. So like I said, I'm glad this actually happened. So yeah, that's honestly kind of it. If you guys, like I said, it's super simple. You're taking a lot of trades, so you're not gonna get 100% accurate, 99% accurate, right? I'm not gonna sit here and say you will have perfect accuracy, but what I will tell you is that it is quite profitable. You are able to catch really nice momentum moves because of the parameters that we have set in place, and I recommend you checking it out. I by no means think that you should just blindly follow this. I would say do your own research. This is kind of me opening a door to totally new, I'm showing you guys a new strategy, but it would, in a perfect world, you guys would look at it and maybe figure out something even better, right? Do not just blindly follow anything, because I'm obviously not licensed, not a financial advisor, so do your own due diligence, do your own research. But I really hope you guys found this video informative, and maybe you learned a few things. So definitely do go try it out, do some research into it, look into it, because it could lend to some really good and profitable trades. But like I said, for the time being, that was kind of it. It was super simple. But yeah, make sure, like I said in the beginning of the video, to check out Bybit. Links are in the description. And then if you have any questions about the video or the strategy, or you just want to come trade with us in our Discord channel or server, make sure to join discord.gg/solartrades. Link will be in the caption below. And like I said, every membership, monthly or yearly, comes with a 3 free-day trial. So there is no reason for you to not come check us out. But yeah, until next time, guys, stay safe, and yeah, have a good one.